The South African Reserve Bank has established its first deposit insurance body called the Corporation for Deposit Insurance, or CODI. This is to protect people's bank deposits in the event of a bank going belly up or being unable to keep its commitments to its clients. When we think about South Africa and VBS, the mutual bank that collapsed after being looted of millions of rands by a group of executives, politicians and municipal officials, according to the official report on the saga. Now, under such a scheme, those depositors would have had some peace of mind of being able to get some of their money back. So let's discuss this further with the Deputy Governor of the SARB, Kuben Naidoo. Good evening to you, Deputy Governor, and welcome to the program. Just a little bit more background to this. I quoted the VBS example in the intro, but just share a little more context for our viewers as to why this development is important.
Sure. Let me state what deposit insurance is. At the moment, if you have a deposit in a bank account and if that bank were to fail, the government may, from the goodness of its heart, decide to give you some money, but it's not legally obligated to do, and it may not. It may not have the money to give you. Deposit insurance is a scheme where people pay, the banks pay. It works out to about 15 to 20 cents per year per person, so it's a very small amount. But all of that money then goes into a pool, and if there is a bank failure, then up to 100,000 Rand worth of qualifying deposits are covered. In other words, you will get your money back within 2 to 3 weeks of the bank failing into another bank account or any way in which you elect to receive your money. In short, that's it. South Africa is one of the last major countries in the world to have deposit insurance. Most major economies have deposit insurance. We think that while we've already got a safe and sound banking system, this protects depositors even further and makes the system more resilient.
I want to go a little bit further into this, into the actual funding model. You talked there about it being, a contribution that would be made over a period of time to eventually fill up the kitty. It's a combination of the cooperative and commercial banks. So just talk to us in a bit more detail about how that would be structured.
Sure. So there's two parts. Each of the banks would be asked to put in what's called a liquidity tier. So they will each make an investment into CODI. That would probably cover, we think now, probably about 15 to 18 billion Rand. That's a once-off amount. That money still belongs to the bank, the commercial or the cooperative bank or mutual bank. That money still belongs to the bank. Over and above that, every year there will be an insurance premium that the banks would pay based on how many deposits they have or how much of covered deposits they have. And a covered deposit is deposits up to 100,000. That money then goes into the kitty, and like any insurance scheme, so if there are 50 people who live on the street and you all have house insurance, your insurance premium goes to the company, and if one person is burgled, then that money is in the first instance used to pay back the person who was burgled. In this case, the Reserve Bank will administer the scheme, and the Reserve Bank is guaranteed that we will be able to pay out any deposit, even if the premiums for the first couple of years don't meet the entire amount that would be needed. The Reserve Bank would pay out those deposits.
Yeah. And would the deposits be, what would those deposits comprise? Does it extend to some of the investments that you would have made, through portfolios with the bank? Are there limitations as to what it covers?
There are certain limitations. The regulations that have to be published in the course of the next year will spell out precisely what that is. At the moment, if you've got a bank deposit, a current account, savings account, doesn't matter, checking account, doesn't matter, even a call account up to 100,000 Rand is covered. However, you only have a 100,000 Rand cover per bank. So if you've got 150,000 Rand in a particular bank, then the 50,000 Rand may not be covered. Money market funds and investments may not be covered. Collective investment scheme investments are not covered. But we will have to spell that out in the detailed regulations over the course of the next year. So even though CODI is formally legally established at the moment, only deposits from the 1st of April 2024 will be covered.
So the finance minister's given yourselves, the SARB, to the green light to go ahead, and CODI now becomes a subsidiary of the SARB. What happens now, and is there immediate coverage?
Sure. So CODI, while CODI exists, CODI does not yet have the money to cover deposits. However, in the past, when there have been bank failures, government has provided what we call an implicit subsidy, an implicit guarantee for certain types of depositors. The first of that was when Sambo collapsed in about 2002. Government backed about 50,000 Rand worth of deposits. When African Bank failed, there were actually very few qualifying deposits, and so government was able to save the bank without having to provide such a guarantee. When VBS failed, deposits up to 100,000 Rand were covered. That cost government about, I forget the actual numbers, that cost government about 240 million Rand in that regard. So that money came from the taxpayers. Going forward, the money from the 1st of April next year, the money will not come from taxpayers. It'll come from this insurance scheme, which is another good thing because it protects the taxpayer from bank failures, collapses.
Yeah. And there's no action, bank clients have to take on their own. This will just be an inherent and tacit agreement that we enter into when you make a deposit with any of the banking institutions in the country.
Yes, at this stage, depositors don't have to do anything. They will be automatically covered, provided that the deposit is in a commercial bank, a mutual bank, or a cooperative bank. They will be automatically covered. Once the scheme is up and running, we may ask people to provide an alternative bank account that they would elect for the money to be paid in case of a bank failure. We may not. We've still got to spell that out. Asking people to elect a second bank has the advantage that the bank deposit can be paid very quickly, but it may have the disadvantage that it encourages people to open up more than one bank account, which is quite inefficient and costly for individuals. So we still got to assess how that works. But for your example, you might, if your wife banks with a different account or your husband banks with a different account, you could elect that account to be used for a payout. So at some point, we will ask people to elect how they would like to receive money in case of a failure.
Kuben Naidoo, thank you for talking to us tonight, Deputy Governor of the SARB there.